Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, May 8, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have great stuff on the docket. We're going to start with the big picture, drill it down a little bit, and we'll get into that scenario where today in the live room / inside the numbers, we had something for everyone. Let's focus right now on the trend line, and you could see low of day was right around that trend line, splitting hairs over pennies on a trend line that comes from the year 2000s, not necessarily a wise thing to do. It's close enough. Let's talk for a moment about how we started out the day this morning from a day trading / swing trading / live room perspective. Yesterday, on Tuesday, before the market even opened, we discussed this. I told traders, here's what I'm doing. I explained what I was doing and where. Right around 518 or a little higher, I was willing to buy puts that were going to expire in a few days. For example, I told the traders I was going to use Friday expiration. The premise of the trade was that they were going to come back to do what? To come back and at least run a test of the breakdown candle high that we've been talking about for days and days and days. The breakdown candle high was 515.30. If you look at a short-term chart, what was the low today? Low was 515.14. What that gave us was, as we woke up this morning, what we call a pocket Whopper. We had a Whopper in our pocket before the day even started. I instructed traders, I begged traders, I pounded the table. It has to be a profit area, regardless of whether they go lower. You want to hold some for lower prices. You want to take it all. It's up to you. But you have to take something off under the secondary premise of everything has a beginning and an end. The whole premise of the trade was that they were going to come back to at least run a test of the breakdown candle high this week. Maybe they do it 3 or 4 times. It's not the point. At least they were going to do it one time, and that was a completed move. Therefore, that was an ending. Therefore, we had to take profit. It was a pocket Whopper. Nice trade. Many traders in the live room made thousands and thousands overnight on that trade. Getting back to the bigger picture, we are in an on-time type of situation. It was today / tomorrow on-time type of situation for the S&P. The bogey is 515.30 on weekly close. They can spend time above it during the week, but closing Friday at 4 o'clock above that price, that is no more downside until they're back below. That is, the trend is your friend. That is a bullish development. Doesn't mean they won't be right back below next week or whatever it is. It's just on its face, 515.30 is our bogey. We did have a rather narrow ranging day today when you consider we had a gap down, we had a rescue operation, and then they basically treaded water all day long. So the market didn't really get very far, but we had participants in the long trade back up. We had participants in the overnight short trade, gap down, profit at the open. We had participants in Tesla this morning in the live room. 170.90 was the buy price. They hit it, spiked it, ripped it back up in the other direction. What was the near-term resistance? 176.04. What was the high in this candle? 176.06. There are no accidents nor coincidences in the market. These are numbers that the live room were privy to before the opening bell. This is the stuff we do in real time. And by the way, I'll have you know, they know exactly, meaning the live room members, they know exactly where 176.04 came from. It's magnetic, it's resistance until they're back above. While we're on the topic of inside the numbers, let's take a look at the commentary. I think you'll find some of this interesting. We really had two pivots today. We had one in the pre-market before the market started to move. Then we had one after the market already moved. So we'll start with this one. Early pivot. This is at 0 dark 30. Market was flat pretty much all night long. When I woke up this morning, it was flat. 517.20 was a pivot. Let's start there. Definitely have some meaning. Right of the vertical is today's activity. You could see they ran up, spiked it, but you can see later on they came up to it, failed a little bit, came up to it, closed pretty much right on it by the end of the day. 517.20 was important. What I urge you to do is pause the video, read the notes, and go back to the chart to double check the work. I'm going to point out a couple of important things. 8:15, the market started to move. Here's where we were discussing in the live room yesterday before the open, laid out a group trade between 518 and 518 and higher. That was a short trade with puts. I was going to eat my hat-ish if they didn't come back to retest 515.30. That's what we discussed in real time yesterday. They were doing it this morning. Funny how this all works. The pre-market thieves worked in our favor on that note today. Now, 8:50, what do we have? This is where it gets kind of interesting. Read the notes, pause the video, do all that stuff. What I want to do is focus on right here in the middle, which puts the support zone between 515.15 and 514.20. Write that down. Put it on a sticky note. 515.15. Back to the charts. What was low of day? You could see in the first candle of the day, low of day happens to be 515.14 by 1 penny below my number, and a rip it back up in the other direction situation. The support zone was between 515.15 and 514.20 for a bounce back in the other direction. Again, funny how that works. That was at 8:50 before the market even opened. It's all in here each and every day. I urge you to pause the video, read the notes, and go back to the chart to double check the work. If you're interested, you will do that, and you will find that this is an invaluable piece of information that you can use to your advantage during the trading day as it relates to the S&P 500, SPY, options on the SPY, options on the SPX, futures, ES, MES, exchange-traded products, whatever your fancy. About stocks on the move. We had 4 potentials, 3 hit their entry objectives. The entry hit column over here already resets after the close all of a sudden. I'm not sure how that happened. However, Twilio, DLR, Uber, and Shop. Let's go over to the charts. Twilio did not hit its entry objective. It was off the board, but I want to show you what happened later in the day. The low here is 57.80 against 57.79 on the board at 0 dark 30 this morning. So we know the numbers work. Just this one in the manner in which we want them to come down in this area in the morning rush hour type stuff, not later in the day when they're dripping lower with no time left on the clock. The takeaway, the numbers work. About Uber, guess what? It opened below the first number, so this number disappears. It's off the board, slightly above the second. They spiked the second, ripped it back up in the other direction for a $2+ gain in a matter of minutes. And then they traded back down toward that number and bounced one more time at the end of the day. But the trade was in here. That one worked. We had a lot of participation in the live room. Nice trade in Uber. DLR didn't do its objective. It's off the board. No trade. About Shop, 61.50 on the board bright and early. Hit the number. Ripped it back a little bit. Gave you a base hit and then some. About $1.50. Not bad for a $60 stock. You never know which ones are going to give you the rocket ride, but we like to put base hits in our pocket. Why? Because base hits put you in the Hall of Fame. Before we move on, I want to go back to the Spider Daily chart and clarify something because I'm getting a lot of questions in the live room. I get them in email, and that's fine. The questions are, or the question is, do you still think there's another leg down coming, or are they just going to float up toward the highs and keep going? Well, I don't know which one, but I do believe there's another leg down coming. I do believe that the correction is not over, but I am aware that if they start closing candles weekly above 515.30, I'm not going to be interested in the downside until they're back below that price. I will have to reassess, and I said this right from the get-go, I'll have to reassess if they close weekly above 515.30. That's the bogey. Write that down. Put it on a sticky note. We are in an on-time type of situation. Write that on the same sticky note. What's going on over in Camp IWM? Well, we had also an on-time type of situation. They had a gap lower. They never filled the gap. Unlike the spiders that actually turned positive today, or the S&P, the IWM did not do that. Relative weakness. They came in to run a test, almost got there of the 50-period moving average, which they just sliced through the other day. So this doesn't have a whole lot of importance other than a guideline type of thing. Back below the 50, and they start working on this candle low over here, which is 201.12. You get below that low, and it opens a door down to a gap, and the 100-period moving average with the 20 right below. So that's the progression of events. You could say that as long as they stay above the 50-period moving average, then she's bullish above all the moving averages. The trend is, in fact, your friend. What's going on with the folks down at the transportation department? They can't get through, as of yet, to recapture the 200-period moving average. This is day number 4 that they're eating time off the clock under the 200-period moving average. One of two things is coming. They're either building energy to run higher, or they can't get through and they will be rejected back down. Right now, they haven't got through, but they haven't been rejected. So we take the market at face value and we say, for now, they're eating time off the clock underneath the 200-period moving average, have yet to get through on a closing basis. We'll use the 200 as a guideline. Below the 20, which is also below this gap here, all bets are off on the upside, and this thing is bearish, likely falling down to retest something in the lower area or lower. What about the Q people? Anything wrong with the Q people? No, they're above all the moving averages. The trend is your friend. Their breakdown candle high happens to be at 442.15. That's a daily chart. The weekly chart, same routine, 442.15, same model as the spiders. They're up testing the breakdown candle high as we speak, as opposed to the S&P that's above the breakdown candle high. They're testing it as we speak. These are important spots. That's why you need to write this stuff on a sticky note. XLF, above all the moving averages. This is bullish. We talked about the bullish, flaggish, pullbackish pattern. Now they're making a higher move back above all the moving averages, trending higher. There's nothing wrong with the financials. We can use the gap as a gauge. The gap is just above today's high. There's a gap left open from the 9th of April. Above that gap, and she turns more bullish. Get rejected at that gap, and we're looking back down toward the moving averages. We'll see how she shakes out. We know how we feel about the financials. If there's nothing wrong with the financials, by and large, it's unlikely that the spool of thread that can be the market will unravel anytime soon. The financials are a big stable point for the market. Smash mouth, above all the moving averages, trend is your friend, up a little bit today, 1/3 of 1%. At present, nothing wrong with smash mouth. What are they doing? Same routine. They're running a test of their, or in the neighborhood of their, breakdown, weekly chart breakdown candle high. Same thing that we just looked at in the Qs. Spiders are ahead of the power curve. They're above that same breakdown candle high. The SMH and the Qs are running a test of that breakdown candle high. This week's close will mean a lot for Mrs. Market. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.